Welcome to the Daily High on this very special day. The market is ripping, and I can't wait to get into the conversation with Tone. How are you, mates? Welcome.
Good, good. It's going to be a good show. Let's just get right into the charts. I'm sure people are very, very curious where we stand with our algorithms here.
All right. Well, I'll take the screen share because I'm very happy to announce. Oh, it's dropped down $400. All right. I won the trade quite clearly because I used 4x leverage where Tone used 3x leverage. We both took the exact same starting price. Tone had more capital in his account, but I took out, we'll call it 140. 140. I took out 140 at 13%. So I'll just add that in right now. This was a mistake. Okay. I've already changed it on the back end. My initial capital was 900. So 900 plus 140 is 1040 is my starting capital for today. I'll
But
put that in.
Matt, wait. Go back to go back to that 900 capital, right?
Yep.
If you put in 900 capital, then your
Oh,
P&L
good
is
call. Good
smaller.
call. Good call. A good call. Good call. Good call. All right. I changed it on my phone, but it didn't update it here. All right. So actually, I only made, oh shit, I still won the trade,
Well, are we
but
sure? Hold on. I'm checking
yeah,
mine.
as the price drops, that doesn't help
What's
me. Check
yours?
yours.
106? I'm
106.
104. I'm 104. You give me like
Ah,
$2 in P&L. 105, 102.
1006.
Yeah, there's a
Man,
$2 to $3 difference, man, between my higher starting capital with the lower leverage.
holy shit. Good catch, Tone.
It was
I
a
amended it
lot,
on my,
was a lot closer than you thought.
yeah, so I fixed it on my phone, but it didn't translate to the computer update. Wow, that was close. All right, so I'll fix the board up right now. Tone, you don't go down because you had a winning trade as well. So I'll just fix it.
Correct. But wait, how much P&L did you add to your starting? Oh, he doesn't hear me at this point. All right, let me go to screen share. Yeah, he's got his headphones off.
All right, I'm back on ears.
All right.
Cool. Wow.
Yeah, I made a mistake as well when I entered that trade. And my mistake was I forgot, I said I was going long, but on the float indicator before the show ended, I left the check mark for short. But I was going long. And why does my initial capital look different? What is happening here? Oh, no, it was 1175. It
Yep.
was 1175. So, uh, how much
Uh,
P&L did you add to your trade? To
I
your
added 106. You can add 104
If
to it.
you're adding 106, I'm adding 104.
Yep.
So in that case, I am going to 279. 1279. That's my new starting capital.
You're still winning.
Okay.
I'm winning on the board, but you're winning in return there, that's for sure.
Yeah. Hopefully
All
we
right.
can get back to round numbers.
Yeah.
um, yeah, there was just a $2 difference. And okay, I'm gonna leave everything as is for now, and then we will
We'll take the charts. Let's see it. Bitcoin is really erratic right now. We shot up. What did we get to?
yeah, what happened
44,800
right here at like 7:30? The moment we went live, everything just went kind of nuts. So just in the
did.
last 5 minutes. So technically, we should both have a lot higher P&Ls right here.
Yeah.
But just in the last
Yeah.
5 minutes, I don't know, someone sold a shit ton of Bitcoin, and the price literally dropped $350 in 5 minutes. Fell right into this 5 minute support area. We're working on a reversal candle, but now we're going into way too low time frames. All right, so should I go first? This is
Yeah. Take it,
really,
mate. Take
really
it.
impressive. So I am pretty confident to say that the 1 to 4 candle correction has ended. Of course, anything can happen, but from a probabilistic perspective, and I know it's only Tuesday, so anything can still happen with this candle. But to me, this is very, very promising. Now, if this candle makes it and closes at a brand new weekly closing high, the following candle will give us a green star candle. green star candles on weekly time frames are huge. Well, like once the MRI bot is in place, that's an excellent opportunity to either generally go long on trades or even adding to your position if the long trade had taken place earlier. There's like an arrow here and then there's this bearish. So I'm going to go to alphanumerics. I'm just going to turn that off. Where's the reverse thing? Show arrows. There it is. I'm going to turn that off for a second. Okay. Had to mute for a second.
I'll just vamp for a second.
Yeah,
that's good.
I don't know why, but he's there. But you can see how the last two green star candles have been absolute monsters, and
the last three.
Well, see, these are a little bit tricky, right? Because it can be debatable. Like the green star did show up way down here in this candle, but it's a weekly candle and the green star can disappear. So it's a little bit disingenuous for me to say I would have definitely, got into Bitcoin way down here the moment the green star showed up, because I'm sure there are instances on this chart where the green star showed up and then disappeared. Like here's one of those examples. This would have been a green star candle earlier in the candle. And had we gone straight down, I would have sat here and said there was never a green star. So you do need to enter these green star candles towards the end of the candle, time-wise, to kind of be certain that the green star is here to stay. Because if you enter on a green star candle and then the market takes the price back down, you should probably exit that trade and not stay with it. But
can I say something, Tone? It's so funny that you say that, because I do kind of the opposite when I use the MRI, and I religiously use the MRI as well. I want to enter that green star candle as soon, like I might even preempt it. Do you know what I mean? Like I'll get in as soon as absolutely possible in that candle, because I have a defined stop loss, which is near to the price. So if I enter that, like say that you go back to that candle that you were just referencing,
right,
you just said like you want to get into it sort of later in the candle. I don't want to do that personally, because then my stop loss is quite far away. Where I'll take a punt on the opening candle with a pretty decent near stop loss, a 1.5 or something, 2% stop loss. That's how I would use it.
But let me explain far away. I'm using the word far away in terms of time, not in terms of price, right? So yes, like here's another example. The green star would have shown up on the first tick of the candle.
Yeah.
Am I going long on the first tick of the candle? The answer is probably not. Okay. It is a weekly candle. So the first tick of the candle is like Sunday night. That's when the green star shows up. It showed up the moment you break a prior candle's high. And since the prior candle closed literally at the high, the next trading pick would have been a green star on a weekly candle. Now, I like to enter these candles when there is more than half the time of the candle has passed. And in this case, the time is a week. So by that point, by the second half of the week, we would have broken the moving average and we would have broken your SAR. So in this case, I'm probably entering somewhere, 60% up the candle. That's just me guessing, right? So I can also do replay mode, and we can see each day how it went, right? But in a candle like this, it's harder to say when the green star showed up. But in this case, it also would have had to break the prior candle swing high, which would have happened in the beginning of the week. But you still have mad resistance here. You have two moving averages above it and an MRI resistance line, ironically looking very similar to the current candle for this week. And I'm probably entering this trade the moment these things are broken, but not the second after. I probably give it like half a day. And now we're probably talking Thursday. So that is likely when I'm entering. But either way, the last 4 green star candles that completed as the green star did take you to higher prices for profitable trades. The only one that did not was this back here, where the green star candle actually closed right at resistance. And but let's get back to the current situation. The current situation looks incredibly bullish. It is only Tuesday. We're never going to get a green star candle on this candle because it can't happen on the first on number one, basically, in the trend. So next candle will be the green star candle, but we're coming off the 1 to 4 candle correction. We're coming off a hammer candle. So for me, right now is the time to go back into the 100% bullish allocation. And yesterday, in my retirement account, I've already deployed most of my capital. I will be deploying the rest today. So we are cleanly back to a 100. I'm going to just delete. I'm going to delete this thing. I'm going to copy this. And we are back to a clean 100%. We are breaking both moving averages. There's 2 days left in the candle, maybe a smidge premature, but next candle will give us the moving average crosses. I think everything is aligned here once again. We can go back 100%. I am comfortable here. Also, maybe I'll pull up the GBTC bleeding later today. It has significantly slowed down. Let me just get these out the way.
Tone, this is a perfect segue for what I wanted to ask you in this show.
Yeah.
And I haven't even gotten to my charts yet. We can get to that later. But this is what I wanted to ask you. You're a systematic trader. I'm a systematic trader. But when do you override your own system to use your own intuition on a trade? You've just done it right now in front of me. You instead of waiting for the green star candle on the daily time frame, you've got other reasons that you look at: the market structure, candle, price action, the 3-day, 4-day time frame, the weekly time frame, the monthly. You've put other things into the pot here to front run your own systematic approach. When do you exercise your own intuition in a trade and override your own systems? Because as a trader, it's something that you have to do. It's like it's what I've done in my trade. When you called me on it, well, you didn't use your system here. I was like, well, I felt good about it.
So in this particular example, I would not say I'm overriding the MRI with intuition. I think this is not the best example for that. But the answer is as rarely as humanly possible. So the real answer is you should never do it. Again, I go back to playing poker, right? Playing poker with intuition is not the best way to play poker. You play the mathematical odds, and sometimes you're kind of certain or you have an idea where you can read your opponent. But intuition is not that. Reading your opponent is a skill. Like a psychiatrist, a psychologist, they kind of read the people around them, right? So that's not intuition. That's a skill set that they have mastered over time. Intuition is like, I feel lucky that the next card is going to be an ace, okay? That's intuition. And you want to do that as rarely as possible. Now, in this particular case, I'm not going to say I'm overriding the MRI. Yes, there's no green star candle, but one of the other parts of the MRI is a 1 to 4 candle correction off an MRI top. And there is a reversal candle. So there is reason to go long here. Now, I may not, if I was a systematic MRI trader, I would not go in my full amount. I would open up the possibility to add more to my position on a green star candle. But had this MRI drop been less severe, and this would have flipped to a green 1, and this would be the same exact candle right now, but instead of on a red 3, happened to be a green 2 above a green 1 with a green star, then I would just go in with a bigger position and not wait for the green star to double down into the position that I had. So in this particular case, I am still within an MRI trade parameters, even though I'm entering slightly before a green star candle. Now, there are instances where I go against my systematic system with some intuition. Usually it's out of fear, not out of greed. And I tend to, give up profits instead of, entering bad trades. But I would say 80% of the time I went against the system. I regretted it. But it's just that you kind of remember those times you got it right and how much money you made, and you forget about the majority of the times you got it wrong. And the reason you forget about the majority of the times you got it wrong is because even though you got it wrong, it didn't wreck your account. Because when it wrecks your account, you're so angry and you're not trading anymore for a while, you tend to not think about it much because it already screwed you too much. So you tend to remember your successes a little bit better than you remember your losses. But the answer to your question is you do it as little as possible. And the other thing I wanted to bring up is it's very interesting because you and I have talked about it before. We've done shows before, and it's a rare situation where the MRI has completely deviated from alphanumerics. When I turn on alphanumerics on the daily, alphanumerics on this crash candle, alphanumerics, the bot alphanumerics, flipped the long to a short, and it was an exit of a long trade. And for me, I was already out of the long trade based on MRI near the top. And the MRI showed up pretty much within a few days after alphanumerics exited the long trade. And now MRI has been long, but alphanumerics has a long way to go before going long. So this is more of a question for you. Now, you're not going to touch the alphanumeric spot trading bot. You're not going to alter it because of this one somewhat of an anomaly that rarely happens. But you countered that with shorter term trades with higher leverage to kind of make up for that. But not a lot of people are going to do that. So what's your advice?
Yeah, I mean that's if I could take back the screen share. Oh no, I'll leave it right there. The bot didn't get out on the 6 there. It actually got out on the 3 when that candle closed, and that's where we went short from. So the bot's not in; it's underwater at the moment. But this is the systematic approach
Wait, the bot got out over here?
No, on the next one. Next one.
Oh, over here.
No, in between those. Split the difference. The green is a green
6.
candle. Green,
Here.
number 3. Red, no, next one. Left. Go back in time.
Here.
Back there. On the top of that candle, where that candle closed on the daily is where we got out. Okay.
Oh, why?
So yeah, right. So
But why?
that's where we got that's where we
But
actually
why?
got out.
But
Yeah.
why?
Well, that was the conditions that were met
Oh,
on
over here?
on the bot. Top of that candle, yeah, where that candle closed. Yeah.
Oh, even though you
Yeah.
didn't hit the SAR yet.
Well, we did. We did hit my SAR. It's a modified lucid SAR.
Oh, okay. That's not the one that I have on my chart.
Yeah, because it's modified in the back end. It's not. It's a
Okay.
black box. That's hence
Okay,
the
got it.
title of
Got
the
it,
thing,
got it, got it,
right?
got it.
Yeah. So that's where we actually got out. So look, and this is the systematic approach. We got into the trade back at 28,000. At that time, I wasn't satisfied. Like I'm happy with the trade getting closed at that point and taking the profit because yeah, we've recovered, but we didn't have to recover. It could have gone way lower. So we cleared out and went short. We could lose money on this trade, but that's okay. It's a long-term investment bot that rolls over. We could pull back here and stay in the trade. There's nothing to say that we're not going to go lower at this point just because it looks bullish now. We could meander for 3 months before while that SAR comes down before we break it. There's nothing to worry about. The bot is just one part of the portfolio. And then, as I said before, in my spot trades are still completely opened. I was happy with the entry. I left them open. I closed out my leverage trades. I opened a new leverage trade at the bottom. And that's the intuition. Can I get the screen share back for a second?
Yeah.
Because I wanted to hit a little bit more on this intuition part of the factor. This is my pinned comment on my Twitter, and I really like this. How do I open it up so I can see all the comments and stuff? So anyway, if you've read Market Wizards, the Market Wizards series, this is a true story. I had a dream. And if you've read Market Wizards, I think the new Market Wizards, Bill Lipschitz talks about in the Market Wizards one afternoon while he was having he had a dream, a power nap, and he woke up and he had a dream that the market was going to take off. And he went into his office and he foresaw it happening, but he didn't take the trade. This is in real time. It's one of my proudest moments. I had a dream and I woke up in the morning that this is I don't know what date is this? I don't know. It's 2001. I had a dream that this was going to happen. 1, 2, 3, 4, 5, 6. And I tweeted it out at that time and said, I just had a dream. And at 33,444, with a stop loss down here at 33,100, I went really long because I saw it in my dream. And it was just pure craziness that I took on that trade. This is the following couple of days. Bang, bang, bang. As I went on, and I've commented here, wow, follow your dreams. And it gets more crazy. This is what it ended up looking like. This is spooky stuff. It's never happened again. It only happened once, and I took that trade, and I just can't get over it. I can't get over, even to this day, that look at this. Put that in your mind for a second with the up, 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 down, up. And this is the picture I drew from my dream. Crazy. So I guess the question about intuition is there osmosis? Are we just staring at these charts for so often, so long, that we're just absorbing it? Was it just luck? Maybe it was just fooled, Nassim Taleb, don't get fooled by randomness. I don't know, but that happened and it was documented. And if I just go into the charts for a second and we look at some of my TA, that's exactly a terrific point that you mentioned. Like, why did I close those leveraged trades? Well, that was systematic. I closed those leveraged trades because the wave turned red here. So I was happy to get out of those trades. I entered back in 27, 28. But when we came down and I got into this trade and we came up and hit here, and I messaged you on Friday and said, oh, should I take the 0.1? And the last night's show, we talked about, well, you'd probably put your stop loss here. I probably should have put a stop loss here, raised my stop loss up, because that would have been the right thing to do as a trader. But I didn't. I don't know why. I just thought, nah, that's good enough for me. We're going on from here. And I took that gamble and it's paid off. Now I can put a stop loss in here and take the 0.1 regardless. So I'm very satisfied with that.
Right, but I also said that when you get back to your 0.1 gain, probably a good time to double down, where a lot of people would be happy to get back to where they were. So had you doubled down, you'd be up 0.2. Right now, you're only up 0.15.
Yeah. Well, I mean,
okay,
that's right. That's right.
It's interesting what you said with the whole dream thing. So I'm gonna just say right away, that was a bad idea. So I try my best not to do that. So I'm gonna show you something, and it's really interesting. So since I happen to be here, by the way, the selling and buying has kind of evened out. As of Friday, basically the exact same amount of Bitcoin that GBTC sold was purchased by other ETFs. But also the important part is GBTC only sold 6,000 Bitcoin from one day to the next. And that's a significant decrease from the 16,000 Bitcoin they were selling in the middle of the week. So this is actually a very bullish factor. So here's what I want to pull up. This is a screenshot from Wells Wilder Jr.'s book. Where should I'm just going to put this thing right here. It's super fascinating. This book was written in 1978. Wells Wilder Jr. is the creator of indicators like the MRI, ADX, and the Lucid SARS, by the way. No, not Lucid SARS, sorry, the SARS.
So that's right. I love Wells Wilder.
I don't know if you ever read this book. It's fairly short. I think it's like maybe 20, 30 pages. And the whole book is technical analysis. The whole book is him presenting his indicators. I can send you the PDF. I have the PDF of the book. And then there is one page in the book about risk management. But here's what he says about risk management.
That should
Actually,
be
I'm gonna
that
let
should be
the
half it, that should be half the book.
right, but I'm gonna let the what happened to my AI bot thing? It's not. Oh, I can't read this. Okay, so um, the message of this book is that there are three parts to a good technical trading plan. Using a good technical system, using the system on the right markets at the right time, using a good money management technique. Of the three, the third is the most important, the easiest to learn, and the hardest to do. Okay? It is the hardest to do because at one time or another, most of us have put all our marbles in one basket, timed it just right, and made a tremendous profit. When this happens, the results are usually twofold. One, it boosts our ego and confidence to the point that we think we can do it at least one more time. Second, the profit was made so quickly that we didn't consider it in the same light as if it took us several years to earn it. There's one more it's absolutely fascinating. And basically he talks about, and the rest he talks about how damaging it is if that trade went the other way. And then he still only spends only one page in his entire book on risk management. So it's but how accurate is this to what happened to you with that trade?
It's incredibly accurate, and I don't. It's not part of my methodology or my system to take dreams as advice. But the fact, I still. What do you put it down to? That I just got lucky on that. It's how accurate it was. What do you put it down to? It's just luck, an
No,
obvious.
I mean, look, I'm not. I do have a scientific mind, but I do think that things happened in dreams that you foresee the future. Remember, there is a high probability we're living in a simulation, so it's not surprising that things like that can happen.
Yeah, I don't know what it is. I don't know if I'm the most spiritual person in the world, but I think that it probably comes down to the amount of time I'm looking at the market. And I still had risk management in that position. I had a stop loss entered, so it wouldn't have wrecked me. I think it just comes down to it. If you look at them long enough, you can sort of get a feel for it. You really can. I don't think that it's astrology for men. I think that it's somewhere in between.
All right, so the other thing I just wanted to jump in on was the S&P 500. Guys, keep in mind the S&P 500 is on a daily MRI top. It's been ripping like crazy. And once again, see, this is my absolute favorite entry right here into the S&P. Why is that a dashed line? Right there. That is one of my absolute favorite entries because not only is it breaking above, and I meant to make the line thicker. Not only is it breaking above the prior swing highs, it's also happening on a green star candle, and it has now run its course. So this is where I think the S&P 500 is going to top and pull back. This was an unprecedented run. S&P is at a new all-time high. I've been bullish on the stock market forever. I remain bullish on the stock market, but I think it's time for the S&P to pull back. So that could have a little bit of an effect on Bitcoin, but I think Bitcoin is going to be left to its own devices and not be as correlated to the S&P as in the past, going into the halving, which is now only about, well, 3 months away at most. So that's looking really, really good. Today is Shitcoin Tuesday, but we have gone a little long. What do you want to do, Matt?
I want to put our trade on, and I apologize for the three people that like shitcoins in the chat. We'll get back to you. But Bitcoin's where the show is, let's be honest.
All right, I'm gonna stop screen share. I'm gonna open up my other window.
All right. I had so much I wanted to talk about tonight, but we got off on a tangent, and I really enjoyed it. So I'll hold it over for tomorrow's show. All good. Do you want me to put the trade on live on air? And you can
Give me a second here. I don't want your trade to influence my trade. So what I want to do is I want to put in my parameters. Wow, we did a serious drop on that 5-minute chart. Let me go back to that 1 hour scale. Let me see what is happening here.
You're not screen sharing. It's just looking
I
at
know,
us.
I know, I know. I didn't want to be screen sharing. That is a nasty 1 hour candle we're working on right now, but I'm gonna get my trade in here. And hold on, I opened Alpha Numerics, not float. I'm gonna, okay, so that's my capital. What's our starting price gonna be for Bitcoin? Let's do 43,400.
All right.
$43,400. You got your trade in, and then I'll go screen share.
No, I haven't got my trade in. I'm looking at your beautiful face. You can
All
put your
right.
trade in. I'll do mine while you do yours.
All right. Well, yeah, you should have your trade in before I go to screen share.
Well, we can't. One of us has got to be on screen. All right, I'll do
Yeah.
mine right live. All right, here we go. Here we go.
All right.
I'll do mine live. You've done yours. Okay. 43, 400. Oh shoot. Sorry,
43,
guys.
400. Yeah.
All right, I am going to go 3x long. Bang. Done. I'm done.
That is
3x
super
long.
funny because I literally left my trade as it was, which means it was going to be 3x long, but I have a higher starting capital.
Well, if we go down, I win.
Correct. So I left mine as it was. So 43.4. I'm also going long. I'm keeping 3x leverage. So here we are.
Fantastic. Fantastic. Give me back the screen share. I'll
Yep.
wrap her
And the
up.
reason I'm going long is just so everybody knows, the main reason why I'm going long is because didn't mean to close that, is because the daily chart still has room until a daily MRI top is in place. And that's not going to happen till early next week. I am trusting the daily MRI. We've broken all resistance. And now I am just waiting for that MRI top exactly the same way the S&P 500 daily is on an MRI top. This is the candle. See the fifth candle in the uptrend, and you can see how Bitcoin has almost the exact same candle in that uptrend on a fifth candle. It is pulling back. It's a reversal-ish candle. It reminds me so much of what happened with the S&P on the daily, and I am looking for a similar outcome, and that's why I'm long, probably for the next few days. All right, I'm going to stop screen share here.
Fantastic. Another great show, Tone. Thank you so much for watching. It's been an absolute joy bringing the show. I can't wait for tomorrow's show because there's a lot held over from today that I want to go through tomorrow. It's really good stuff. Please use the affiliate links, the black box affiliate links below for trading. If you're interested in leverage trading, please visit alphanumetrics.com and tonebase.com. And once again, we'll see you tomorrow. Let's go for Bitcoin. Let's keep it going.
All right, thanks, guys.